All right, so let's dive into this interesting dynamic that's happening in the stock market,
Okay.
specifically with the Russell 2000.
Okay.
Now, some listeners might be thinking, wait a minute, isn't the market like booming right now? I mean,
Yeah.
the S&P 500 is hitting, all-time highs.
Right.
But here's the thing.
Okay.
The Russell 2000, which tracks 2,000 small cap companies, hasn't actually officially entered a bull market yet.
It's a pretty curious disconnect.
Yeah.
Isn't it?
Yeah.
You have the S&P 500 with, those big, huge tech giants kind of carrying it higher.
Right.
But the Russell 2000, it's, less than 9% away from its high back in 2021.
Yeah.
But it hasn't closed above that peak yet.
Exactly. So what's going on here?
Yeah.
Well, a Motley Fool article that we're looking at here suggests that two big forces might be aligning to kind of push the Russell 2000 into that bull market territory.
Okay.
And those two forces are falling interest rates and the policies of the incoming Trump administration.
Now, falling interest rates, people might think, well, that's good for everyone, right?
Right.
But they can really have a big impact on small cap companies in particular.
Yeah. Yeah, why is that?
Well, because those companies, they tend to rely more on debt financing.
Okay.
To, kind of fuel their growth.
Gotcha.
And there's a really fascinating statistic here from J.P. Morgan Chase.
Okay.
That shows 38% of the debt held by companies in the Russell 2000 has a floating interest rate.
Wow.
Compared to just 6% for the S&P 500.
Okay.
Pretty big difference.
So lower interest rates obviously mean lower repayment costs for those companies.
Exactly.
Which could free up, a big chunk of change for them to invest in, expansion research and development or whatever else they need to grow.
Exactly. And this is where what the Fed has been doing lately really comes into play.
Right.
They've already cut rates 3 times since September.
Yeah.
And this Motley Fool article seems to think they might cut even more in 2025.
Mm-hmm.
And if that happens, it could really help the Russell 2000 take off.
So it's interesting because this article we're looking at, it was published in January of 2025. Yeah. Just before the start of Trump's second term.
Right.
And it almost feels like they're predicting a repeat of what we saw during his first term, back in 2017.
Yeah, it's...
Do you remember that big surge in the market?
It's an astute observation.
Yeah.
And the article does point out several of Trump's, business-friendly policies.
Yeah. That
could really create a good environment for the Russell 2000.
Right.
They specifically mentioned tariffs on foreign products.
Okay.
Deregulation.
Yeah.
And a lower corporate tax rate for companies that are manufacturing in the U.S.
Okay, so let's break down each one of those policies a little bit.
Sure.
First up, tariffs. How would tariffs benefit smaller companies?
Well, the idea with tariffs is to make American businesses more competitive.
Gotcha.
By making imported goods more expensive. So this could make domestic products, particularly the ones made by those, smaller, more agile companies in the Russell 2000,
right,
more attractive to consumers.
So it's kind of like leveling the playing field in a way.
Exactly, giving those domestic producers a little bit of an edge.
Gotcha. And what about deregulation? Wasn't that a pretty big theme during Trump's first term?
Absolutely, and that could be particularly impactful for smaller companies.
Okay.
They often, feel the burden of regulation more than larger companies.
Right.
So reducing that red tape, across all those government agencies could really save them a lot of money.
Yeah.
And free up resources that they can then invest in growth.
And then there's the lower corporate tax rate, specifically for companies that are manufacturing in the U.S.
Right.
And that seems like a pretty clear incentive to bring production back to America.
Yeah, it's definitely a policy designed to, encourage that resurgence in American manufacturing.
Right.
And if it's successful, it could be really good for those Russell 2000 companies that are focused on domestic manufacturing.
Okay, so we've got falling interest rates, potentially favorable policies, and a history of strong performance, during a similar period in the past.
Right.
It sounds like the Motley Fool is pretty confident that the Russell 2000 is about to break out.
They are?
They even recommend the iShares Russell 2000 ETF, ticker IWM, as a way to invest in the index.
And their confidence isn't entirely unfounded,
Right.
Remember back in 2017, that first year of Trump's first term?
Yeah.
That IWM ETF returned 13.1%.
Wow.
Which is way higher than its average annual return of 7.9% since 2000.
But, of course.
Yeah, there's always but, right?
There's always a but.
Past performance doesn't guarantee future results.
That is a crucial point to remember.
Yeah.
Investing in the stock market always carries some risk.
Right.
And no one can predict the future with, complete certainty.
It's tempting to look at those big returns from 2017 and think, oh, here we go again.
Right.
But you really got to take a step back and look at the situation critically.
So what are some questions that investors should be asking themselves as they try to assess this potential Russell 2000 bull market?
Yeah. What could, throw a wrench in the works?
Yeah. What could go wrong?
Well, for one thing, we got to remember that the global economy is, it's a complex beast.
It is.
It's unpredictable.
For sure.
Unexpected things happen all the time.
Right.
A sudden spike in oil prices, geopolitical crisis.
Right.
These things can really shift investor sentiment quickly.
Yeah.
And, dampen growth prospects,
Yeah.
even for companies that seem to be in a good position.
That's a good point. And even if the overall economy is strong, specific sectors within the Russell 2000 might face headwinds. Maybe consumer spending weakens, or there's, some kind of shift in technology that negatively impacts some of these smaller companies.
Absolutely. And we can't forget about the potential impact of policy changes either.
Right.
This article focuses on Trump's proposals.
Right.
But what if those policies don't actually work out as planned?
Yeah.
Or what if they have some unintended consequences that we're not thinking about?
Yeah, that's a good point. And, of course, we can't ignore the competitive landscape.
Right.
I mean, large cap companies aren't just going to sit back and watch as smaller companies try to, eat into their market share.
They're constantly innovating and adapting.
Right.
Which, could make it tough for those smaller companies that are trying to gain a foothold.
So what does all of this mean for our listeners?
Yeah.
Should they be rushing out to buy the IWM ETF?
Right.
Or should they steer clear altogether?
It's not about making, these big pronouncements or blindly following predictions.
Yeah.
It's about understanding what's really going on.
Right.
Weighing the potential rewards against the risks and making smart decisions that line up with your own investment goals and how much risk you're comfortable with.
In other words, do your homework.
Exactly.
Don't just, rely on headlines or hot tips.
Right.
Dig deeper.
Yeah.
Analyze the things that could drive growth in the Russell 2000, but also, be realistic about the potential pitfalls.
Exactly. And remember, investing is a journey. It's not a destination.
Right.
It's a process of, constantly learning, adapting, and making strategic decisions based on the best information you have.
So the potential for a Russell 2000 bull market is definitely there.
Yeah.
But it's not a sure thing.
Right.
It's up to each investor to do their research.
Absolutely.
And make informed decisions.
That's what makes the market so fascinating.
Yeah.
It's this constant interplay of forces.
Yeah.
It's a puzzle to solve.
It is.
It's an opportunity to really use your knowledge and your analytical skills.
Well said. Now, before we wrap up this part of our deep dive, let's shift our focus to the bigger picture here.
Okay.
If the Russell 2000 does outperform, what could that tell us about the state of the broader economy?
That's a great question, and one that's worth exploring.
Yeah.
You see, small cap companies are often seen as a kind of a bellwether for economic health. And how they perform can give us some valuable insights into how Main Street is doing.
Okay.
We'll dig into that fascinating connection in the next part of our deep dive.
Sounds good.
Welcome back to our deep dive into this potential Russell 2000 bull market.
Yeah, we left off with a pretty interesting question. If the Russell 2000 does take off, what would that tell us about the health of the broader U.S. economy?
Right. Well, small cap companies, they're often seen as kind of a barometer for Main Street's economic vitality.
Oh.
Unlike their large cap counterparts, which often have, big international operations.
Right.
Small caps tend to be more deeply rooted in the domestic market.
So their performance gives us like a more localized ground level view of how, businesses and consumers are doing across the country.
Precisely. If the Russell 2000 surges, it could be a sign that American consumers are feeling good. That businesses are investing and that the economic engine is humming along.
So a Russell 2000 bull market wouldn't just be a win for investors. It could be a positive indicator for the entire U.S. economy.
Yeah, that's a key point. But it's important to remember that the stock market is just one piece of a very complex economic puzzle.
Right.
So while a strong Russell 2000 performance might suggest a healthy economy, we got to look at other economic indicators too and avoid drawing, big conclusions just based on market movements.
Fair enough, but it's definitely a correlation worth, paying attention to.
Yeah.
Now let's shift gears a bit and zoom in on the composition of the Russell 2000.
Okay.
If this index does take off, are there any specific sectors within it that might be particularly well positioned for growth?
Absolutely. The
Yeah.
Russell 2000, it's a diverse collection of companies across a wide range of industries. And certain sectors are probably going to be more sensitive to these economic and policy trends we've been talking about.
Let's start with the industrials sector. I believe that holds the largest weighting in the Russell 2000.
You're right. Industrials make up almost 19% of the index.
Wow.
And if those policies aimed at, boosting American manufacturing actually work out,
Right.
this sector could see a big upswing.
We're talking about companies involved in, machinery, construction, aerospace, those kinds of things.
Exactly.
If more businesses decide to, make it in America, the demand for those companies' products and services could really jump.
Right. And don't forget about the potential impact of infrastructure spending, too.
Oh, yeah.
If the government invests heavily in projects like roads, bridges, airports,
Right.
that would create a surge in demand for industrial companies' expertise.
So industrials could be a sector to watch closely.
Definitely.
What about healthcare? That's another pretty big chunk of the Russell 2000.
Healthcare is interesting because it's often considered relatively recession-proof. Even when the economy weakens, people still need healthcare.
Right. People don't stop going to the doctor or filling their prescriptions just because the stock market's down.
Think about it like that.
Makes sense. And within healthcare, are there any specific subsectors that would really thrive in a Russell 2000 bull market?
Well, biotechnology companies are a pretty interesting case.
Okay.
They're often at the forefront of developing, cutting-edge drugs and therapies.
Right.
And their research and development efforts, those are often financed with debt.
Right.
So those falling interest rates we talked about earlier could be huge for them.
Yeah.
Lower borrowing costs means they have more money for research,
Yeah.
which could lead to breakthroughs and ultimately, growth.
So biotechnology, high potential, but also inherently risky.
Yeah.
It's kind of like placing a bet on scientific breakthroughs.
Right.
You could hit a home run, but you could also strike out.
That's a good way to put it.
Yeah.
Biotech investments can be volatile. But for investors who are comfortable with that risk, it's a sector worth looking into.
Okay. We've covered industrials, healthcare. Are there any other sectors on your radar?
Well, financials are another one that could be significantly impacted by these trends,
Okay.
especially small banks.
Okay.
Remember, those institutions are particularly sensitive to interest rate movements.
Right.
Because their profitability depends on the difference between the interest they earn on loans
Right.
and the interest they pay on deposits.
Okay. So as interest rates rise, that difference or spread widens, and that leads to higher profits for the banks.
Exactly. But with this Motley Fool article predicting more interest rate cuts,
Yeah.
wouldn't that squeeze those profit margins?
That's what I was thinking. Yeah.
It's not necessarily that simple.
Okay.
While lower interest rates might compress their margins a little bit,
Yeah.
they could also stimulate loan growth.
Oh, okay.
Businesses and consumers are more likely to borrow money when rates are low. So a drop in rates could actually lead to an increase in lending activity,
Okay.
which could be good for small banks.
And we also have to consider, the overall economic picture.
Right.
If the Russell 2000's performance is any indication, the economy is probably going to be strong. And a healthy economy generally means good things for the financial sector.
Right. So with financials, it's not as easy as just saying lower rates are bad for banks.
Right.
There are a lot of factors at play here.
Yeah.
And you need to dig a little deeper to really understand the potential impact on this sector.
It seems like there's a lot of nuance to consider when evaluating any of these sectors.
Yeah.
It's not about making blanket statements,
No.
but rather, doing your research and identifying specific companies that are well positioned to benefit from these broader trends.
That's the key. We're painting with broad strokes here.
Yeah.
But the real opportunities for investors are going to come from, really looking at individual company financials,
Right.
assessing their competitive landscape,
Yeah.
and understanding their long-term growth strategies.
Right. Investing isn't about, blindly following predictions or betting on entire sectors.
Yeah.
It's about doing your research,
Uh-huh.
understanding the individual companies that you're putting your money into,
Exactly.
and making decisions based on that research.
Couldn't agree more. Now, before we move on, I think it's important to acknowledge that
Yeah.
while a Russell 2000 bull market could bring some great benefits,
Right.
we also need to think about the potential downsides.
Yeah, of course.
No investment comes without risk,
Right.
and it's important to be aware of both the potential rewards and the potential pitfalls.
That's a great point, and one that investors, often overlook.
Yeah.
So let's flip the script here and dig into some of the risks associated with a potential Russell 2000 boom.
Sounds good.
Okay, so we've talked about, the potential upside of a Russell 2000 bull market, but as we all know, no investment is risk-free.
That's right. It's kind of like sailing a ship.
Yeah.
Through these exciting but potentially dangerous waters.
Okay.
You got to chart a course that gives you the best chance of reaching your destination.
Right.
But you also have to be aware of the hazards along the way.
I love that analogy. So what are some of the hazards investors should be looking out for when it comes to, a surging Russell 2000? What could rock the boat, so to speak?
Well, one of the first things that comes to mind is the potential for increased market volatility.
Okay.
Small cap companies tend to be more volatile than those bigger, more established companies.
Right.
Their share prices can swing up and down, more dramatically.
Yeah.
In response to news earnings reports or even just, changes in how investors are feeling.
Right.
So if we see a really quick run up in Russell 2000 prices,
yeah,
you got to be ready for a potentially bumpy ride.
So it's not just about, how much you could gain. It's also about, being able to handle those potential drops.
Exactly. And there's always the risk that a surge in prices could create like a bubble.
Oh, okay.
That eventually bursts.
Right.
This is especially worrisome if investors get caught up in all the hype.
Yeah.
And start driving prices up beyond what the companies are actually worth based on their fundamentals.
Okay, so volatility and the risk of a bubble, those are two things to watch out for. What else should we be thinking about?
Another thing to consider is the possibility of increased economic inequality.
Okay.
If small cap companies, which are often more focused on the U.S.,
right,
are doing great while those big multinational corporations are lagging behind,
yeah,
it might mean that the benefits of economic growth aren't being spread evenly across society.
So a rising tide in the Russell 2000 might not lift all boats.
That's a possibility worth thinking about.
Yeah.
And we should also think about the potential impact on inflation.
Okay.
If small businesses are booming and wages are going up,
right,
it could push prices higher.
Yeah.
Which would reduce consumers' purchasing power.
Right.
And potentially lead to, bigger economic problems down the road.
So a Russell 2000 bull market. Yeah. It's not all good. It could have some unintended consequences that we need to be aware of.
That's the thing about economics. There are always trade-offs, and it's complicated.
Right.
But with careful analysis and a balanced perspective,
yeah,
investors can navigate those, tricky situations.
Right.
And potentially benefit from the opportunities that a rising Russell 2000 might bring.
So where do we go from here? We've talked about, what could drive a Russell 2000 bull market, the sectors that might benefit and some of the risks involved. What's the main takeaway for our listeners?
I think the most important message is that knowledge is power.
Okay.
The more you know about the market, the better prepared you'll be to make good investment decisions.
Right.
Don't just rely on headlines or, those hot stock tips.
Yeah.
Do your own research.
Right.
Dig into those company financials.
Yeah.
Look at their competition and think about their long-term growth prospects.
So it's all about doing your homework and not getting caught up in the hype or the fear?
Exactly. And remember, diversification is key.
Okay.
Don't put all your eggs in one basket.
Right.
Even if you're really bullish on a particular sector or company.
Right.
Spread your investments around.
Yeah.
Different sectors, different companies, even different types of assets.
Yeah.
That'll help you manage your risk.
Okay.
And set yourself up for success in the long run.
Good advice.
Yeah.
Well, I think we've covered a lot of ground today. We've looked at the potential for a Russell 2000 bull market from a lot of different angles.
Well, yeah.
We talked about the exciting opportunities and the potential risks.
It's been a fascinating deep dive.
It has.
And I hope our listeners are leaving with a better understanding of this, interesting part of the market.
Yeah, and maybe even more importantly, a renewed sense of curiosity and a desire to keep learning and exploring.
Absolutely. The market is always changing.
Yeah.
There's always something new to discover.
That's true.
So stay curious, stay informed, and keep asking those thought-provoking questions.
Couldn't have said it better myself. That's a great note to end on. Thank you for joining us on this deep dive into the Russell 2000. We'll be back next time with another interesting topic to explore. Until then, happy investing.